Welcome to World Wealthwise. Let's discuss GST implications on liquidated damages in this article. We aim to demystify this topic, providing clarity and insights into the matter. Understanding liquidated damages are a form of compensation paid to one party by another as a result of a breach of contract or an unintentional action. The fundamental question that arises is whether GST should be levied on such payments. To unravel this, let's discuss one simple example. Consider a scenario where you enter into a gift shop with the intention to purchasing a thoughtful present. However, due to an unforeseen mishap, you accidentally damage a product. In such a case, the shopkeeper rightfully demands compensation for the damage incurred. But should GST be applied to this compensation? The answer is a resounding no. Why? Because in this situation, there was no prior agreement between you and the shopkeeper regarding damages or compensation. Furthermore, as per Section 7 of the GST Act, no supply of goods or services occurred. This means that the amount you pay as compensation is purely consequential and doesn't meet the criteria for consideration, as defined by tax laws. The divergent judgments, one of the key challenges in determining the taxability of liquidated damages, is the divergent judgments from courts and advanced ruling authorities. Some decisions favor the taxpayer, while others support the tax department. This inconsistency adds an additional layer of complexity to an already intricate issue. The role of CBIC Circular 178/10/2022. To alleviate this confusion, CBIC had already been issued Circular 178/10/2022, wherein CBIC clarified the scenarios under which liquidated damages should not attract GST liability. The circular serves as a valuable reference point in resolving disputes related to this matter. While analyzing the taxability of liquidated damages to make an informed judgment on whether GST should be applied to liquidated damages, in my view, it is essential to follow a structured approach. 1. Analyze the situation. Start by scrutinizing the reason for the liquidated damages. Was there a prior agreement for damages, or did they arise as a consequence of an unintentional act? 2. Supply under Section 7. Determine whether the situation meets the criteria for a supply as defined by Section 7 of the GST Act. If no supply occurred, GST does not apply. 3. Schedule 2 Para 5. Examine whether the situation falls under Para 5 of Schedule 2 of the GST Act. If it doesn't, there may not be a GST liability. 4. Analyze the definition of consideration. Assess whether the compensation paid qualifies as consideration according to tax laws. Consideration typically includes payments made in response to or for the inducement of the supply of goods or services. Please share, subscribe, and like the content to reach it to the wider audience.